Well, for more perspective on the EU-China investment deal, let's bring in Henry Huiyao Wang. He's the founder and president of the Center for China and Globalization. Welcome to the show.
Thank you.
So what's your take on how the EU is managing its shifting approach to the investment deal with China, as well as the timing of these concerns?
Well, I think this is, if it's turned out to be true, or if it's going to really happen, it's going to be a serious mistake. I would say that a very misjudgment on that. I understand there's some pressure. The G7 is having meetings, and there's also there were sanctions between each other. But I think those should be temporarily, because the CAI actually is a long-term agreement between China and the EU. It started in 2014, and then it gone through over 30 rounds of talks, and finally they clinched the deal by the end of last year. I think this is very significant, given there's such a heavy bilateral trade and investment between China and the EU countries, and also, after all, I mean, the pandemic is really affecting all the countries, particularly as the EU as well. So it's important that China is also remained as one of the most largest growing economy during the pandemic, and this would be very bad move on the side of the EU at this time to do that. But I think, given all the business interests, I hope this is temporary, not a long term.
So then, speaking of the business interests, what were China and the EU hoping to get out of this deal in order to boost their respective economies, and what's the potential fallout if this does fall apart?
Well, I think this is a very significant deal. I mean, for a long time, European company complained about market access, complained about IPR issues, compared about labor rights, and complained about all the restrictions that they have. So after 7 years of more than 30 rounds of negotiations and give and take, and finally, I think last year China gave a very substantial, compromise to really reach this deal, so that the European companies not only get a deal for themselves, but probably compare with phase one deal with U.S. European company was getting this deal is really very beneficial to European companies. European company EU Chamber has surveyed again in China, and most companies still want to do business here. As a matter of fact, there's more company does more business in China than EU now. For example, all the auto industry, Volkswagen, BMW, Daimler, Mercedes, and all those Airbus, all the pharmaceutical companies, all those cosmetic companies, you name it, hotel, there's a financial sector is totally opened up now to EU companies. So it'd be really, I think it'd be very foolish to now to really stop this, or maybe put a negative pressure on this, because I think it's really to the interest of EU company. I mean, given the trade tensions between China and the US, EU should really get better access to this.
So then let's talk motivation, because some commentators have suggested that this friction is a way for the EU to appease the US. How much of it is about the US relationship in the EU versus, say, other factors?
Well, I think this certainly has some effect on that, definitely. I mean, as I said, the G7 is going on. Secretary Blinken is really saying that. But even Secretary Blinken said that he doesn't want to seek a cold war with China. He doesn't want to isolate China. EU leaders are stress strategic independence. And so I think it's really important for EU to really take a good advantage of this situation, and really be a partner of both sides rather than taking a side. Also, US said they don't want to encourage people to take the side, but I look at the real situation may not be the case. So I think that for EU really to be neutral, and then it would be great for the EU companies, and also for having the investment from China. For example, this year the China-European train, they have gone up 50%, to 12,000 dispatches of China-European continental trains, shipping all the goods back and forth. So that's really good for the EU economy, and also strategically important for EU to pursue a bit independent on that.
So then how should businesses and industries in both the EU and China really strategize with this deal still in flux right now?
Well, I think that I'm sure the business community is really working on. For example, China, CCPIT, China Promotion of International Trade Council, just released the report yesterday, saying that it'd be great for the EU-China deal to happen. So there'll be more investment coming from EU, but also more investment from China to EU as well. And also, I think that the European companies are really all looking forward to this deal. I'm sure it will be enormous setback for European company operations in China, because they are domestically they are really hitting very hard, but also in China, it's the only company, European company, that can make a profit, huge profit, and also be really expanding the market, giving China now become the second largest economy, but also probably the largest economy in a few years' time. With the 400 million middle class, is 800 million people out of poverty. You can imagine that China is going to have the most lucrative market for all the European companies. It would be really silly after 7 years of 30 rounds of talks of hard negotiation bargains. So as ministry spokesman said in China, it really no, this deal is really, if it's not going through, it's bad for the European companies, not only for China, but also very bad for the European companies and for the EU as a whole, for the EU economy during this really troubled time.